Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, we will discuss about IFRS. In IFRS, special reference to Ind AS 16, which is about recognition and measurement of property, plant and equipment. Usually in short form, we call it as PPE. So, basically Ind AS 16, which is in convergence with IFRS, that means which is formulated according to the requirement of IFRS. So, in this session we will see how an item of property, plant or equipment is recognized, measured and shown in the balance sheet. Balance sheet is called as statement of financial position as per the new terminology. So, how these things and how the calculation of PPE happens and what are the different terms they use and how it is being recognized and measured, we will discuss in this session. So, I will be using the term property, plant, equipment, financial statements, Ind AS 16 in this session. So, what is Ind AS 16 basically? So, the principal issues in accounting for property, plant and equipment are the recognition of the assets and determination of their carrying amounts and the depreciation charges and impairment losses in connection to them. So, first and foremost, when we talk about these three set of assets, property, plant and equipment, so when we acquire it, when we purchase it, we have to record it. Since they are the non-current assets, it has to be recorded in the books of account, and non-current assets are subject to depreciation, has to be depreciated at a particular method and has to be shown in the books of account until the asset is being sold. So, now the question is, while recording the value of these assets, there are some issues and confusions. For example, I am buying a plant. So, the plant value is say 1 lakh. Now, before purchase of the plant, I have done a small survey about which one has to be bought. Then again I have spent some money for it. Then for installation of the plant, I have spent some more amount on it. Then again I need some technician who can help me out with the installation and with the maintenance. And again regular maintenance of this plant also incurs some of the expenditure. Now, the question is, what has to be recorded as the cost of the asset? Do I record the invoice price? Do I record along with the VAT that I have paid? Do I include the installation? Do I include the maintenance? Like, what are the expenses which has to be recognized as the cost of the asset? And once the cost is recognized, how it has to be depreciated and how it has to be presented in the books of account. So, for all these doubts, Ind AS gives a solution. So, let us see what Ind AS talks about PPE. So, in Ind AS 16, these are the important terms that we use. We use something called as carrying amount. So, before this IFRS era, we used to call it as net book value or book value. It is similar to that. Carrying amount means the cost of the asset minus the accumulated depreciation gives me the carrying amount, which is similar to the book value. Then of course, cost, we all know cost, but here the initial cost has its own way of calculation. Then depreciable amount, what is the amount on which we have to calculate the depreciation, then the depreciation. Then we have something called as fair value. Fair value means the asset, if the asset is sold in the arm length of transaction, that means if it is sold in the immediate future, what is the value that it can fetch, that is called as the fair value. Then entity specific value, then impairment loss, recoverable amount, residual value. So, all these things are there which we are going to use in the coming sessions. So, let us see how to recognize the value of the asset. So, I have given a small format for calculating the initial cost of the asset. So, first and foremost we start with the purchase price. It also it is also called as invoice price. What is the actual invoice price which we have paid it for? Usually invoice price includes the GST and VAT which is subject to. So, always it should be inclusive of it. Okay. If it was not included, then we have to include it to the purchase price. Then if we are importing it, so whatever the import duties and charges, transportation costs that we have incurred also should be part of the asset. Then if we are paying any taxes also should be part of the purchases. Then out of this we have to minus if there are any trade discounts and rebates offered. Like before, because of buying this asset, if the supplier has given us a trade discount or we have got a rebate from the government. So, any such discounts and rebates has to be deducted. So, here we need to be careful, we have to deduct only the trade discount, not the cash discount. So, you are clear about what is trade discount and cash discount. Trade discount is the discount given by the supplier on the purchase of the asset, whereas the cash discount is given by him if we are buying the asset on credit. If we pay the amount within a stipulated time as per the terms and condition, he may waive off some of the amount that we are supposed to pay, that is called as cash discount. Anyway, here in the calculation we do not deduct the cash discount, only trade discounts are deducted. Then along with all these we add any other cost which are directly attributable to bringing the asset to the location necessary for it to be capable of operating in the manner it is intended to be by the management. That means any other cost you have, you are paying for some technician, you are paying some installation, you are paying some amount of erection. So, anything, delivery charge, transportation, assembly cost, professional fees, all that if it is in connection with the purchase of the asset should be added to the cost of the asset. Then we also add the initial estimate of the cost of dismantling and removing the item and resorting the site on which it is located. This is very important, often students get confused with it. See, I am buying a plant or I am constructing a plant and I am going to use the plant for 7 years, for example. After 7 years it has to be dismantled, and for such dismantling I may incur some expenses. According to Ind AS 16, any such estimated dismantling amount also should be added to the cost. Though this is not the actual cost I have incurred, though I may incur after certain number of years, but still as per Ind AS guidelines we have to incur this initial estimated amount of dismantling also as part of the cost of the asset. So, if I compile all this, then I will get the initial cost of the asset. So, usually in the exam the question will come for calculating the initial cost of the asset, maybe for 6 marks, sometimes it also comes for 7 marks as per the adjustments may be. Okay. So, in this connection you need to know a few important items, like we have to know what about depreciation, how to calculate depreciation. So, here usually we follow the depreciation method, which is a straight line method, where we follow a formula, cost minus residual value divided by the number of years will give the annual depreciation. That annual depreciation is taken as depreciation charge in the statement of profit and loss, and also it is carried to the balance sheet as the accumulated depreciation. Then, as I told, carrying amount, it is similar to your book value, what we used to do earlier, or how we used to term it as book value. Same thing is being called as carrying amount. Carrying amount is nothing but the initial cost minus the depreciation. Say I have calculated the cost comes to 1 lakh and I am depreciating it at 10,000 this year. So, 1 lakh minus 10,000, which is 90,000, is considered as the carrying amount. For example, for the next year, so already first year I have charged 10,000, next year when I again charge 10,000, then the accumulated depreciation becomes 20. So, the carrying amount at the end of second year would be 1 lakh minus 20,000, which will be 80,000. So, I have given an example here. So, let us go through with the example clearly. So, it says Skanda Limited set up a manufacturing plant near industrial area. The price paid for the equipment is 2,50,000 including VAT 25,000. That means this 2,50,000 also includes the VAT amount. Then they give as an adjustment, to finance the equipment, company took a bank loan of 50,000 at an interest rate of 14.5% per annum. That means they have given information about the loan that they have taken for buying this asset. And they have also incurred costs like freight 6,000, customs 5,000, then installation expenses 5,000, and they also say rupees 1,000 will be incurred on cleaning the spare parts after the equipment was put to use. So, now with all this information, they are asking you to calculate the original cost of the equipment as per Ind AS. So, now if we look at this example, they have given what is the price paid, what is VAT, what is the loan that they have taken, what is the interest on loan, what are the additional costs that they have incurred. So, what is the cost that they are going to incur will be incurring for cleaning the spare parts and all. So, now out of this, what has to be recognized as the initial cost as per Ind AS 16 is a question mark. Now, let us go back to the formula. The formula says, of course, purchase price is part of the cost, or any other incidental costs like installation, carriage, transportation, all that is part of the cost of the asset. But here we have few more information, like he is taking a loan and he is paying interest on it. Should we add it to the cost of the asset? The answer is no, because it is not part of the cost of the asset. You have taken a loan for buying the asset, fine, but the interest what you pay does not constitute the cost of the asset. It is a separate expenditure altogether. Again, there is one more item which says for cleaning the spare parts once the asset is put for use. Again, this cleaning is a recurring expense. You have to use it always, like you have to incur this expenditure for cleaning, maybe periodically. Even that cannot be considered as the part of the cost of the asset. See, the main thumb rule is, or main idea is, the expenditure has to be non-recurring. That means it has to be a one-time expenditure in order to consider it as the cost of the asset. Okay. Yeah. Now, let us see the solution. So, I have already made the solution, please have a look at it. So, we are starting with the purchase price 2,50,000, and we are not doing anything about the VAT, because VAT is already included in this, because in the example they say that VAT is already included, it is inclusive of this. So, we do not have to do anything extra about it. Then the freight charge, of course, you are spending in connection to bringing the asset. Then the custom duty you are paying, it is a one time expenditure. Then the installation expenses, of course, part of the cost. So, if I sum up all this, you can see the total cost or the original cost or initial cost of the asset is 2,66,000. Now, if you notice at the note, I have given certain note in the solution. What is the note? First one, VAT need not to be added separately. Why need not to be added separately? Because it is already part of the purchase price. Then the second thing, cleaning charges should not be included. Why? Because it is a recurring expense. You have to keep paying for the cleaning charges. So, it is not part of the cost. Then the last one, bank loan and the interest is not considered, as it is not part of the expenditure incurred on the asset. Okay. You have taken a loan, it is a liability, you are paying the interest on the loan, it is an expenditure. So, it has nothing to do with the original cost of the asset. Okay. Yes. So, I have given one more example. Hope you have understood the previous example, how we have calculated. So, in the same way, we have one more example. Let us see what does this example is all about. Hariom Traders purchased a plant from Shivam Limited on 30/9/2015 with a quoted price of 200 lakhs. Shivam Limited offered 3 months credit with a condition that the discount of 1.5 will be allowed if the payment were made within 1 month. Then VAT is 14% on the quoted price. Company incurred 2% on transportation, 3% on erection cost on the quoted price. Pre-operative cost amounted to 2 lakhs. Estimated life of the plant is 8 years. Residual value of the plant is 20 lakhs. With all these information, they are asking you to calculate the original cost and also the carrying amount on 31st/3/2016. Again, in this question also, we have been given so many numbers. The numbers are quoted price is given, what is the loan they have taken, and what is the cash discount which is getting offered, then what is the VAT percentage, what is the transportation cost, erection cost, what is pre-operative cost, all that is been given. Now again we have to refer to the format for calculating the cost. As you all know, the price plus any other non-recurring expenses in connection to the purchase of the asset has to be considered. So let us have a look at the solution. So purchase price is 200 lakhs, of course part of the cost. VAT 14%. So here they have this purchase price does not include VAT. So we have to add it separate. So 14% of the purchase price or the cost given is VAT. So we are adding 14%. Then transportation, of course part of the cost we are adding it. Erection charges, of course we are adding it. Then the pre-operative costs. Pre-operative costs means before the asset is acquired. So we have done we have incurred some of the expenditure, even that is part of the cost of the asset. So we are adding it. So in this we have excluded the discount part, which is a cash discount. As I told you, only the trade discount is considered, not the cash discount. So we are not considering that into account. So if I compile it, I get the total cost of the asset, which is 240 lakhs. So the question has two parts in fact. They are asking you the cost as well as the carrying amount. What is the carrying amount? Carrying amount is the cost minus accumulated depreciation. So cost we have already calculated. For the accumulated depreciation, we have to calculate it. What is the formula? Cost minus residual value divided by number of years. We have calculated the cost, which is 240, and they have already given the residual value, minus it, minus 20, and they have given the number of years of operation, which is 8. So 240 minus 20 will be 220, divided by 8 will give us 27.5 lakhs, which is the annual depreciation. So in order to calculate the carrying amount, we have to minus this annual depreciation with the cost, which is 240 minus 27.5, which gives 212.5 lakhs. Okay. So in the note also I have mentioned discount is not considered because it is a cash discount, only the trade discounts are deducted from the purchase price. So hope you have understood both these examples what we have discussed in connection to PPE, a very important topic from the point of view of examination. So you need to know in this topic how to calculate the initial cost, how to calculate the depreciation, and how to calculate the carrying amount. Usually it comes for 6 marks in the section B. If they give in section C, usually it is given as a part of the question. So they may ask it for 7 marks or 8 marks. So actually there is one more example, and of course there is a solution as well, which is similar to. Okay. So I would like to conclude the session by saying that PPE, one of the very important Ind AS, it is with Ind AS 16, and here the main idea is how to calculate, how to recognize the value of the asset, how to calculate the carrying amount, how to calculate the depreciation here on. Okay. So hope you have understood the session. These are some of the references that you can go through for more examples. I would suggest please practice more and more examples so that you get the concept clear. Thank you very much. In the next session, we will discuss about some other IFRS, that is Ind AS. Thank you all.